All right, good morning, everyone. Happy Sunday. It's 6:30 a.m., June 7th. My name is Amal, and I'm here to do your Bitcoin and crypto analysis. So the first thing that we need to note on this 15-minute chart right here is that we had a previous consolidation range right here. And the thing about ranges is that how you exit from the range and what you do thereafter is critically important. So after this period of consolidation, which in this moment kind of looked like a bull flag that was possibly going to break up, it didn't. In fact, it actually pushed up a little bit with a fake out and then dumped down. Now, when you draw these ranges, it's also important to see how price reacts once it drops out of the range. And as you can see right here, it's continuously come back towards the range, but gotten rejected pretty much with lower highs. I don't really count this scam wick right here because sometimes these are just liquidations coming in or short squeezes. But for the most part, you can kind of see like a rolling movement like that. And so this is a positive sign in terms of the bears doing their best to actually push the price down, which is away from this range right here. Okay. So the good thing is that the bears are doing their job of pushing the price down. What they need to do is actually establish, key lower highs and lower lows. So if you guys know very well, a bullish structure is one where, let's just say price comes down, right? And then it does something like this and it heads down further and further. But then after a while, it kind of stops going down and it does something like this, which is puts in a higher low, goes up further, puts in a higher high, and then higher high right there. So this is an important turn in the structure that was once bearish with the key lower highs and lower highs. And then once you put in a low, you put in a higher low. And as per this key low or this key low, right, you put in a higher high right there or even a higher high right there. This is the change of structure, okay? Now, what you can see so far in Bitcoin is the bit of a turning that we still have, which is, we've dropped out of this range, right? We put in this low right here, put in this lower high, lower high, lower high. Once we start taking out this low, which is around 95.25, we should start heading down further. Now for this, we have to go up on the higher time frames, okay? So let's look at the 1 hour, right? So the 1 hour, we've clearly seen that after this big drop that we had several days back, we had this kind of, higher low movement, okay? Even over here. Here, the structure is slightly changed because we had this key higher low as per this higher low, but then we put in this lower low, right? So the structure has changed a little bit in this movement right here. But nonetheless, after this high has been established, right, we've just put in lower highs simply. So what we now need to see is at least this low being taken out. And of course, further than that, we need to see, at least on the Coinbase exchange, because Coinbase is where we do not see a huge wick down. We want to see this low being taken out after this big heavy drop. Once that low gets taken out, I'd probably say it's smooth sailing all the way down to this key level down here, which is, let me see here. On the 4 hour time frame, I'd probably say smooth sailing all the way down towards these key lows around $8,500 or so. Okay, but until then, the bears need to show that they're here to play, that they are ready to force the price down further. This is a good rollover in my opinion. All right. Now, another thing that is very interesting is that if you look at these two trend lines right here, this dotted one and this solid trend line, you could see that when we made this big move to the 10,400 or 10,500 area, we got quickly pushed back down under this solid black trend line. Even over here, we tried to escape it, push back down under. The second trend line is this black dashed trend line, which is from this key high to this key lower high. Now you can see the bears are trying to do their job to force it under this trend line, right? And when it comes to bots or algos, I think bots and algos are definitely aware of trend lines. That I can tell you for sure. They're also they're also capable of understanding standard deviations of price movements, which happen to correlate with trend lines. They're also aware of moving averages. There's a lot of things that bots and algos are aware of when it comes to driving the price. So when we look at this structure right here, what you really want to see is a full 4-hour candle close below this area, this dashed area right here, line area, and some follow through on the way down. The big level to watch is this key marker, June monthly open 94.45. Let me turn off this alert here. So, it's been my understanding so far in crypto that the monthly opens are key. And, to be honest, it's a pretty important marker in equity markets as well. Once you start breaking below the monthly open, so let's just say you do something like this and you start doing like that and you start breaking down, I'd probably say we head down to the next, biggest support. And more often than not, you tend to identify big support levels based on where a lot of the volume has taken place. So if we do something like this, you can see there's two identifiable peaks, one up here around $9,500, $9,600 and one down here around $8,850 or so. These peaks are important because it helps you understand where a lot of the volume has taken place, a lot of the movement has taken place. This is where the bigger players are trying to be subtle with their movement in large chunks of volume, right? Because big players operate out of big money, and big money is hard to hide when it comes to volume, okay? So you get to see the footprint of their movement in this kind of fixed range indicator. And it helps you see that the first big area of volume is this $9,500, $9,600, and the big one right here below that is $8,850 or so. So in my opinion, right, you could see we're right on that point of control, this red line right here. We call it the point of control. This is the high volume node. You break this, all right, more than likely you're probably going to head down to the next area with the highest level of support, way the heck down here around 88.50. All right, but breaking that is going to be key. What we've really done over the past several days is kind of just chop around here, meander around here, and not really do a whole lot. Now, I am aware of somewhat of a developing head and shoulders pattern, which I've mentioned before, kind of like that, okay? So again, if that does happen, I could easily see us going down to 88.50. Another thing that I've mentioned is the mining outflows from this specific mining pool. So if you understand how Bitcoin miners work, right, they have a certain amount of cost when it comes to electricity, rent, etc. Okay, that their mining equipment and insurance and whatnot. If the cost of Bitcoin right now, in terms of its price, is not profitable for the miners, well, what do? They have to sell their Bitcoin, right? So this is where you see this chart right here, okay? Unknown mining pool 1 outflows. This is Bitcoin coming out of the miners' hands and going on to the exchanges, which is where you see total BTC inflows into all exchanges. Over here, you can see several times, so let's zoom into this a little bit more. Over here, you can see several times, this is when we started hitting the 10K area the last several weeks, you can see a good amount of inflows coming into the exchange. Even if we zoom in a little bit closer, right, the inflows are pretty clear that there's more and more Bitcoin being put onto the exchange. Well, why does that happen? Well, you don't just bring Bitcoin onto the exchange to do anything else with other than sell, right? And you sell into USDT, USD, depending on what exchange. What we've also seen lately is a lot of USDT printing. And I have a inclination that this Bitcoin is being sold into that USDT that is being minted. I've long held the belief that over the last several months, the reason we've seen so much printing is because there has been a large influx of sellers trying to get out of the market. And I think the USDT printing is the preparation of that, whether it's miners doing that or bigger professionals doing that. I think I wrote this on my Twitter feed as well, to be honest. a while back, but I think I also wrote it again. Let me see here. So I mentioned it right here 17 hours ago. I mentioned this before, and I'll say it again. The mass printing of USDT since March is not bullish. There's a preparation and or exit of large BTC holders, possibly miners or possibly professionals, reducing exposure. You know, the one other thing that I wanted to mention is what the stock market has done over the last week is almost analogous to what happened in terms of its feeling or its sentiment in December 2017 when Bitcoin aggressively popped. And the reason this is important to mention is because to me, it seems like the stock market is also coming to a point where it is overly extended to the upside. And I'm thinking once it starts rolling over, Bitcoin will be pressed hard to move down as well. And I've also taken the stance that I think Bitcoin starts to roll over or starts to bottom out before the stock market. So for example, over here, you know, Bitcoin pretty much topped out on February 13th, 2020 right here when we had 10,550, right? If you look over here, the stock market topped out here around February 19th, so 6 or 7 days before. And then over here, the stock market bottomed at March 23rd, but then Bitcoin bottomed right here around March 13th, so about 10 days before. So Bitcoin topped about 6 days before, bottomed at about 10 days before. So I'm thinking, you know, just going along with that logic, so bear with me. I'm thinking that this is possibly the top. Once we start that rollover down, I could probably see the S&P 500 following us maybe within a week, maybe within 10 days. It's a bit of a stretch for me to draw those conclusions only on 2 events of this cycle, but the coronavirus cycle has also been an unprecedented one, and who knows of the correlations between these 2 markets. Remember, the correlations like this happen because of the triggering of how algos are supposed to operate in specific environments with specific assets, especially something like Bitcoin, which is a high-risk asset. All right, so they're effectively turned on to possibly mimic the movements of the market, and once the market has pretty much topped out, you know, we just start rolling over. Right, same thing with the S&P 500. Okay, it's a very high-frequency trading world. You know, tech and bots and algos really dominate the trading space more so than people can understand. And the reason I'm aware of that is because of some of the more famous, you know, Jim Simons interviews. He's a previous mathematician. He started Renaissance Technologies, which is an investment firm based purely on his mathematical skills and algos that he's built. So this is some of the information that I've taken away from how he has spoken about the trading and finance world and how the markets tend to operate now. So this is not something that I'm pulling out of my ass. It's real research that has been done by a billionaire who has created a hedge fund specifically to move the markets or understand the markets based on how the bots and algos are designed to move them. All right, so going back to Bitcoin, okay? So if we start seeing that, you know, this could be the top or any of these were the top and we're starting to roll over, like I said, we should be making that move down towards this 8586 level. All right. So there's really nothing else to it other than, you know, I've told you guys about the inflows coming into the exchanges. I've told you guys about even on the 4-hour, the OBV still is not showing any sign of strength. OBV meaning, you know, the inflows coming into the market, showing us if we're supposed to see money flowing in to drive up the price. That's not there. Okay. So that amongst other things, which I've mentioned again, and also make sure you guys follow this person, Ceteris Paribus. He or she puts out interesting information on the volatility as well as the options information regarding Bitcoin or altcoins, even Ethereum. And the one thing that he mentioned was the implied volatility on Bitcoin options is back to pre-Black Thursday levels. Black Thursday meaning when we saw this big drop in Bitcoin right here. So what does that mean exactly, right? Well, first of all, implied volatility is how much an asset tends to move on a day-to-day, month-to-month basis, okay? So in this case, implied volatility, 3 months on a daily rolling basis. So what this effectively means is that volatility itself has been fairly calm for Bitcoin. And Bitcoin being a volatile asset doesn't tend to stay calm that long. It will probably have some very volatile, aggressive moves sooner rather than later. So we can expect volatility is all we can perceive from that. Now, the volatility, if it's going up or down, that is hard to say, and no one can really dictate if we're going to go up or down. But based on our technical analysis of what I've told you, based on the metrics of miners selling, OBV showing lack of inflows, price slowly rolling over, the technical showing us that we're breaking, key levels one level at a time on the way down, especially once we break June monthly open. This should be fairly easy for us to head down further. So these are the things that we need to pay attention to, which are indicating to us that price has a higher chance of falling further down versus than it has moving up. That's pretty much it, folks. If you guys want to join Advantage, again, we have 50% off. Today, we do have Austin Ashraf, who is a former hedge fund, former portfolio manager at Citigroup, and he currently operates a hedge fund in the outskirts of Houston, Texas. And we get a private conversation with him to discuss his take on the market, his positions on the market. So this is going to be a lot of fun for our Advantage members. And I personally think conversations like this make our community worth it, because when do you get to have a private conversation and understand how a hedge fund is specifically positioned in the market and how they're looking to trade from a week-to-week perspective? That to me is really worth the Advantage membership, because of the connections that we have to bring on awesome people like Austin, who simply want to help and educate people in our Advantage community. So that's it. Thank you guys so much for watching. Take care, and I'll catch up with y'all soon.